Hey investor friends, I'm Michelle Markey, and today, May 1st, 2021, was the Berkshire Hathaway annual meeting where Warren Buffett reunited with his longtime business partner of 62 years, Charlie Munger, in sunny Los Angeles. And you wouldn't know that it wasn't in Omaha because the stage looked exactly like it did as it normally is in Omaha, with the Coca-Cola and peanut brittle on the table. So it's kind of funny how they set that up to look exactly as if everything was normal when they moved the whole show to LA just to be with Charlie, which I'm appreciative that they did because he had some real zingers in the Q&A session today that I really enjoyed. And do you ever feel like you go to a retreat and feel refreshed afterwards? That's how I felt like today, where I bathed in their wisdom and hopefully I'll be wiser for it. And I hope to share some of that wisdom with you from my following takeaways and highlights from the meeting. During the meeting, I was basically on autopilot taking copious notes. And then after listening to the Yahoo post-game show, which is kind of funny that they called it that, but I listened to some of the commentary the Yahoo people had, and then also added to my notes of what I thought of the overall meeting. And then I was hungry because it was kind of evening time on the East Coast, so I made myself a cheeseburger, and then I watched some college lacrosse to digest fully what I learned today from the meeting. And then I went back to creating a bunch of slides that were distilled from my copious notes, and I ended up making 10 slides that I'm not going to sit and read every single one, but I'll periodically show them and draw from them my favorite highlights or what I feel like talking about that stood out to me. And if you enjoy also the wisdom from Buffett and Munger, I'd love if you could please like and subscribe because it greatly helps out my YouTube channel. It lets me know that you're interested in this subject matter and that I should talk about more of these things because it's helpful to you. I greatly appreciate it. Thanks. Let me just say, I find it super adorable that Buffett said that he and Munger both have love affairs with their houses that they bought like 60 years ago and never left. And I find that awesome that they're so comfortable in where they set down their roots and they still found a way to stay in touch after all these years of one person being in the middle of America in Omaha and the other person being in LA. Also joining Buffett and Munger on stage were Greg Abel, who mostly answered questions about the railroad business and inflation and raw materials, and Ajit Jain, who answered questions about the insurance businesses and risk management and risk factors. And Buffett talked briefly about the Q1 2021 quarter performance, where you would see based on generally accepted accounting principles, or also known as GAAP rules, that there may have been some unrealized losses that were shown in Q1 of 2020, and meanwhile in this year's Q1 their unrealized profits were up. And even though Buffett doesn't really like to show results that way, those are the rules, so he has to show it that way. But in general, he said that we had a very unusual and self-induced recession last year, obviously because of the COVID pandemic, where everything came to a grinding halt in March 2020, and therefore it was really weird. And with tremendous fiscal and monetary policies that intervened, things were able to get better. And Buffett said that their businesses are doing very well. And of course, the only exception to that would be some of the businesses that are still adversely affected by current restrictions still in place. So otherwise, Buffett seemed to be pretty optimistic about the future economic outlook of Berkshire. I love how Buffett referred to Charlie, the vice chairman of Berkshire Hathaway, as being in charge of company culture, and he sees Charlie as this true north for any questions he has, and he goes to him and talks about whatever, and Charlie's an enormous help. And then Buffett talks about how he has a few lessons for new stock market entrants, where it can seem like by doing 30 to 40 trades a day, it's a very easy game to make money at. But then he goes into some very interesting history lessons. So Buffett brings up a list of the top 20 largest companies in the world by market cap as of March 2021. And he talks about how the top 5 out of 6 are all US companies that I'm going to call a MAF, or also known as Apple, Microsoft, Amazon, Alphabet, and Facebook. And number 2 was basically the whole country of Saudi Arabia, as Buffett referred to it as. But if you look at how we got here, it's not because the US was smarter or stronger or that we had better soil or a decent climate, but because the system worked unbelievably well. And he points this out because he talks about how if you think about, were these the same companies on this list 30 years ago? And he brings up then another chart from 1989 of the top 20 companies at that time by market cap. And you can see that none of them are the same companies. And in fact, the top number 1 spot was actually Bank of Japan, and that's no longer the case. And Buffett said how 1989 wasn't the dark ages, that over the past 30 years, capitalism has worked extraordinarily well, and the world can change in very dramatic ways. And back then, people thought they knew a lot about the stock market, and even efficient market theory was in, and it's probably still never gone out of style, to be honest. But he says that actually, incidentally, makes a great case for index funds, in that if you had just been aboard the index fund ship, you would have done well being invested over 30 years in diversified equities, and you would have won. And he says in his preference in US equities, but if you had just invested, you would have done well. So the moral of that story is extraordinary things can happen. And even if you had a wonderful bull market like Japan did, things can change. And back then, USA only had 6 companies on that list. Now it has 13. And you also see Chinese and Korean companies on that list. And later on in the meeting, Buffett and Munger actually talked about how they think there will be more Chinese companies in the top 20 in the future, if you had to take a guess, in the next 30 years. But Buffett still hopes that there will be more American companies on that list. Buffett's second lesson is that people get enormously attracted to various industries, and sometimes people disregard sales and earnings numbers when they're selling IPOs and SPACs, but he says it's the place to be right now. And he draws an analogy to the car industry in the early 1900s when it was just starting out, and it was so new, and there were over 2,000 car companies back in the day. And who would have thought that only 3 would remain in 2009, and 2 of which had gone bankrupt. Even Ford Motor Company failed twice. And so it's a very difficult place to really gauge who the winners will be in the end. So he thinks of this in a similar way to what's going on in certain industries that he doesn't call out specifically, but you can infer based on which types of companies in certain industries are having a lot of IPOs and SPACs right now. What stands out to me is Buffett's reflections on the actions that Berkshire Hathaway and the government took during the beginning of the pandemic last year, in that Buffett doesn't regret selling the airlines and cutting back on bank stocks, and he thinks that the government acted with speed and decisiveness, and that both fiscal and monetary policies did the job. And that was great because it allowed our economy to be 85% back on track, and he thinks we're in a red-hot economy now, and he wouldn't have wanted to feel obligated to help the airlines. That's why Buffett sold the airlines, because he knew that they were going to get government help, and I guess Buffett wanted to save some of that cash for something else where they could swoop in and help out on terms that maybe Berkshire would prefer. And even though the economy is running in super high gear now, Buffett warns that we've got some inflation with that, and he still could have done things better, he admits, but I still think he's pretty content overall with how Berkshire's been performing since the March 2020 lows. If you wanted investing advice from these greatest of all time investors, you'll get opposite opinions from Charlie and Buffett. Charlie says he prefers holding Berkshire over the market, and he's quite comfortable with that. Whereas Buffett recommends the S&P 500 index. He never recommends Berkshire to anyone because he doesn't think the average person can pick stocks. So if they don't have any special feelings about Berkshire and don't know anything about picking stocks, then they ought to just invest in the S&P 500 index, because he says that Berkshire has an unusual group of shareholders that view Berkshire as a lifetime savings vehicle. So it's not for everyone, but he thinks that 99.7% of his estate should go to philanthropy, and he wouldn't mind it going to an index fund, but he doesn't want it to just end up reducing the government debt as just another line item on the government debt line, even though he wouldn't know if it did. And Charlie said he can guarantee it won't bother Buffett because he won't be around by then. Fun little tidbits related to energy and climate. Buffett said that in buying Chevron, he likes hydrocarbons and hopes that they'll stay around, and he has no compunction about that. And Charlie chimed in saying, sight unseen, if a guy married into your family, he'd rather take a guy from Chevron than an English professor, which I thought was funny. And then he talked about how across the 1 million shareholders that Berkshire has, many of them don't ask about climate change reports. So he says that Berkshire only does asinine things that they're required to do and not complete questionnaires that have answers that don't mean anything to them. And Buffett talks about how Berkshire is built on autonomy. He says that he's probably the only CEO of an S&P 500 company that doesn't expect consolidated income statements every month. And regarding some more on the energy front, Greg Abel mentioned that Berkshire Hathaway Energy does plan to decarbonize, but we need to have a foundation first of being able to transmit high voltage. So that means bringing the energy that's from wind in Wyoming down to urban areas like Las Vegas, and being able to pull that off takes time. And then I'm sure this is a very complex topic, but some of the highlights about insurance and risk management that stood out to me is the Ajit Jain saying that they try to manage their exposures across different categories by setting boundaries. And then the insurance industry is becoming more sophisticated, where if there are some risk factors, they're not just localized, but you have to evaluate how they might affect the entire portfolio. And then they said that Geico is catching up to Progressive because they've had some of the best performance in recent years in matching insurance rates to risk. And they think that Geico manages their expenses better than anyone else in the industry. You can see that the relationship that Ajit Jain and Greg Abel have is more on a professional working basis than the basically best friendship that Charlie and Buffett have, and that what Ajit and Greg do is just exchange some notes and talk to each other when there's major things to maybe talk about, whereas you can see Buffett talks to Charlie all the time, and Buffett is basically gushing over Charlie, in that he says that over the last 62 years of their friendship and business partnership, they've never had an argument and literally have never been mad at each other. And Charlie talks about how he admires Costco and he's enjoyed his long association with them, and he likes Berkshire too, and luckily there's no conflict. And Buffett admits that he made a mistake by selling some of Apple, but he says that he can only get away with some of those with Charlie, and he's already used up his getting away with selling some Costco and Apple with him. 97-year-old Charlie comes to the defense of America's big tech companies in saying that they've been very important for America and they've been a credit to our society and civilization, and they're huge, and he doesn't like some of the anti-competitive reasonings maybe bringing them down. So he's basically throwing some shade on some of the antitrust proceedings lately with big tech. And then Buffett says that he doesn't think valuations are crazy, and he thinks that he has a pretty good understanding of what Apple means to the consumer and what he thinks the future will be with that company. I want to expand on why Buffett said that he doesn't think valuations are crazy. And he said that interest rates are to the value of assets what gravity is to matter. And what this means is we've had a sea change of shoveling a lot of money through fiscal and monetary policy. And so far, we haven't had unpleasant consequences of that, where when people are getting $1,400 stimulus checks, they're flourishing and able to do things. And a few years ago, 40% of the population couldn't even come up with $400. So right now, everything seems pretty great, but in economics, you never just do one thing. There's always and then what. And if this is allowed to continue, we might have serious consequences down the line. But for now, Buffett thinks everything is pretty good. I like how Buffett said that trillions of dollars don't mean anything to anyone, but $1,400 does mean something, and we will see where it all leads. And he said that Charlie and I consider it to be the most interesting movie we've ever seen in economics. And then Charlie chimes in with how this extreme conduct was more feasible than anyone thought, but if it's done without any limit, it will end in disaster. And what I think of this as is sort of an analogy with watching a movie in a movie theater and someone starts smelling something burning, and then slowly one person starts walking out because they're afraid there might be fire, and then gradually someone else notices and they also start leaving the movie theater until towards it's really burning now and there's fire visible. People start running for the exits and we have a stampede, and then that's where we'll have disaster. But it doesn't start out that way, as you can see. So Buffett and Munger are sort of enjoying the movie while now maybe smelling a little bit of something burning, but not yet sounding any alarms. Buffett admits that SPACs have been a killer for him in trying to find new acquisitions, but he thinks it's where the money is now, that it won't go on forever. And they talk a lot about how we have a current gambling type of market, and they quote something from John Maynard Keynes in that he said, "Speculators may do no harm as bubbles on a steady stream of enterprise, but the position is serious when enterprise becomes a bubble on a whirlpool of speculation, and when capital development of a country becomes a byproduct of the activities of a casino, the job is likely to be ill done." So that's just a little bit of a warning that there's a lot of money to be made in gambling in the markets, but it probably won't last. Buffett said that the gambling impulse is very strong worldwide, but nobody tells you when the clock turns 12 midnight and things turn into pumpkins and mice. Then Charlie rages about how it's fee-driven buying, where it's easy money to be made from things like SPACs and total return derivatives, and it's a moral failing because when pushed to excess, it leads to bad effects for civilization. And he thinks that it's not just stupid, but it's shameful too. And Buffett said, but it's not shameful on the people who gamble. And he said, no, I don't mind the poor fish. He doesn't like the professionals that take the poor suckers. So just goes to show that in spite of what seems like our market is enraptured in a casino-like environment, that we better be careful about if we're being taken in by the professionals who stand to make money off retail investors. Using another fish idiom, Charlie says how they're used to shooting fish in a barrel, but it's harder to do right now. And Buffett says that we'd have 10 to 15% of total assets in cash, and they would love to put it to work, but present conditions don't really allow for that. But things can change very rapidly, sometimes in markets. So they're waiting basically to see when it's time to invest that money and be able to deploy it into opportunities that make sense to them. And then Charlie also talks about how Bernie Sanders basically won, how we have low interest rates and everything is booming. And Charlie said what's going to happen is that the millennial generation is going to have a hell of a time getting rich compared to their generation. So that makes me feel kind of like I'm sort of like displeased at this idea that my generation is going to have a harder time getting some wealth accumulated. So I don't know. I mean, I still love Charlie for giving us real talk, but it doesn't make me feel very secure about the future of my fellow millennials. On the ways that Berkshire can allocate its cash, Buffett talks about how share repurchases, or also known as buybacks, are a way to distribute it when other people want Berkshire to reinvest that cash. And for a great majority of Berkshire shareholders, they're savers, so it helps them have a larger share of Berkshire ownership. And Charlie says that if you're just repurchasing shares to make the stock price go up, it's deeply immoral. But in Berkshire's case, they believe that it's one of the better deals and it just happens to cause the intrinsic value to go up of the company, but they believe that their money is better being invested through buying back shares of Berkshire than maybe some other companies. And on the topic of dividends, Buffett said that they had a vote years ago and the shareholders didn't want dividends, so that's why there aren't any dividends with Berkshire. However, with Coca-Cola, the expectation has been set that people expect dividends. So if you were to change that up and take dividends away, then there would probably be an uproar. So that's why Coke won't be changing to the way Berkshire Hathaway does it. And on a few other eclectic financial and economic things going on, Charlie thinks it's dumb for a state to be taxing its wealthy, so it makes them leave the state. And we all know which state this is. And Buffett also talks about how it's interesting if you think about the US government owning Berkshire AA stock, where they get a certain percentage of earnings via taxes. And think about how much that stock would be worth if you could put a price on it. And then he also talks about how the potential merger or acquisition of Canadian National or Canadian Pacific buying Kansas City Southern isn't going to have a big effect on their Burlington Northern Santa Fe railroad operations, and there's nothing magical about the Kansas line. And then also Buffett talks about how he'll continue making mistakes and that he paid too much for precision cast parts. And even though he's satisfied and happy with the management and thinks it's a terrific company, he misjudged the earning power of this company. Buffett said that when they're disappointed in the performance of some of the subsidiaries, it becomes a smaller percentage of their business. And they said they started out in textiles, retail department stores, and trading stamps. And those have all gone down the toilet. So they've changed and adapted and bought other flourishing companies that bring in the cash flow. And he also says that people are worried and ask him, don't they know that coal is being phased out? But Buffett kind of brushes some of that off and isn't too worried. And in all of Buffett's business experience, he says when he reads annual reports and the prospectus and the risk factors in that section, he never sees what a lot of companies end up having as the number one problem, which is having a bad management. And it's really hard to get rid of a bad CEO, especially if they're nice and especially if they're trying. And of course, we couldn't get through this annual meeting without someone bringing up cryptocurrencies. And Buffett, again, tries to remain diplomatic and cite a quote from a governor being like, I'm all right on that one, where he says that we probably have 100,000 people who own crypto watching and maybe 2 people are short on it. And if we only make those 2 people happy, we'll have 100,000 people mad at us. So Buffett doesn't want that. Meanwhile, Charlie is like, of course I hate the Bitcoin pause success. So it's kind of funny how he kind of sounds like he's saying he hates Bitcoin, but he's kind of referring to the success of the Bitcoin. So he's not full out just totally denouncing it, even though his latter statement about how he thinks the whole development is disgusting and it's bad for civilization, he kind of lets it all out there. And Buffett is like, I'm all right on that one. And then a few more fun facts going on at Berkshire in that they've proposed that they could deliver an energy solution to Texas by 2023. And even though we've got inflation going on, Buffett says you want a margin of safety, and they're willing to back it up with $4 billion, essentially offering to pay a penalty if they don't deliver on this solution. And then if Elon Musk called to colonize Mars, Ajit Jain would hard pass, but for Buffett, he said it would depend on the premium and if Elon is on board the rocket ship. And then also dream businesses take little capital and then they grow a lot. That's why Berkshire owns some software businesses like Apple and Snowflake, but they found the same thing in the 70s with See's Candies. And Buffett doesn't want the terrific assets of Berkshire known as Todd and Ted to be quizzed by people so that they can be competed with. He wants to preserve their ability to pick stocks and keep it a secret as much as possible. And then Charlie tips his hat to the Chinese in that government lifted 800 billion people out of poverty fast and allowed business to flourish. And Charlie said that he doesn't care if the cat is black or white. It matters that it just catches mice. and that's Charlie's kind of way to talk. On the topic of Larry Summers sounding alarm bells about how there will be more inflation, Buffett says that they don't know, and Charlie admires Larry, saying that he likes how he tells it the way he thinks it is. But Buffett is saying overall they are seeing some inflationary effects with people raising prices to them, and they're also raising prices. So it is happening, but it's being accepted. And then Buffett says how he generally likes the banks, but they had to cut back on some of them because when they own over 10% of equities, they have to submit filings to the Securities and Exchange Commission. And that's part of some insider trading forms that they have to file some of their transactions every couple of days. So Buffett tries to avoid that pain in the neck by kind of being a little bit below the 10% threshold of owning certain securities. Someone brought up the joint venture with JP Morgan and Amazon about trying to reform some of their healthcare practices. And Buffett said with healthcare making up 17% of GDP, they were trying to fight a tapeworm and it won. And Buffett said that it was absolute genius when the federal income tax went to the withholding system where people's contributions and premiums to their healthcare insurance are taken out of their paycheck and they don't even think that it's much of a cost to them. And then that's also a way that businesses get actually a deduction in their taxes too. And then Charlie said that at least we were aiming for the elephant even if we missed. Charlie and Buffett also reflect on some of their principles and their sense of moral compass. And that Charlie says that he doesn't think that Berkshire's getting too big to manage. It's very decentralized. They give a lot of authority to the subsidiaries and it has more benefits than defects. And then Buffett's looking forward to the S1 filing eventually if Robinhood IPOs, and it's part of the casino group and he hopes that there's not more of them. And then Charlie says how he thinks that it's really waving the red flag at the bull. And he mentioned this a little bit earlier too. So it's twice that he's talking about waving red flags at bulls. And Charlie says how they don't want to make money selling things that are bad for people. And he thinks it's deeply wrong. But he says that states are even worse than Robinhood with selling the lottery to people. And then Buffett chimes in, they're taxing hope. That's a little bit grim, but it gives us a sobering lesson for all of us to learn. In the last question of the meeting, someone quoted something Charlie said in the past in "You have to be a continuous learning machine," and asked what did Charlie and Buffett learn in the past year, to which Buffett responded, the biggest lesson he had is to listen to Charlie more. And then Charlie retorted, I don't know. If you're not a little confused by what's going on, you don't understand it. And we're in uncharted territory. And Buffett responds in saying, we enjoy in a crazy way actually seeing what happens. This has made us halfway through the movie much more interested. This is an unusual movie. Our basic principles, we don't want to disappoint the people who left their money with us. Things flow out of that. And we've seen some strange things happen in the world in the last year. And we've always recognized that stranger things are going to happen in the future. It's reinforced our desire to figure out everything possible to make sure Berkshire 50 to 100 years from now is every bit the organization that it is now. And then Charlie says, well, of course that's the idea. I think it's pretty likely to work. And Buffett says, we wouldn't have spent the past 55 years at it unless we did. And then Buffett says, Becky, is that the last question? So that wrapped up the annual meeting in 2021, and I got a lot out of it, and I hope my key takeaways helped you also get something out of it. And also I encourage you to watch the whole meeting if you're willing to stomach 3.5 hours of question and answers, and I don't think you'll regret it because there's way more wisdom to get out of all of what they said beyond what I could have summarized today. And if you enjoyed this video or learned something, please like and subscribe and let me know what you thought about the meeting in the comments. I'd love to hear from you. Till next time.